G'day, it's Simon and Ben here from Pumped On Property. I've got my crippled brother right next to me. But in today's video, we're going to bring you a bit of a market update, and it feels as though a lot has kind of happened over the last month since we recorded our last market update. So kind of excited to dive into it. A bit unfortunate that a lot of Australia has kind of gone into lockdown over the last little while, which has brought a hell of a lot of fear back, but you know, it hasn't really affected the property market at all, and there's still some really amazing things happening. So we're going to bring some information about the Olympics from CoreLogic, Propertyology, Property Share Market Economics, and REIQ to see what they're sort of seeing at the moment, and also some ideas of what could potentially come as well.
I have never seen a year like this now. Now that the annual averages are starting to come through, when it comes to rent returns, when it comes to capital gains, when it comes to monthly returns, like, it is phenomenal. It is by far the best I've ever seen it in Australia right now.
Oh man, it's crazy. Like, we were just going through a few different articles from CoreLogic, and to see some of the rental increases around Australia is insane. Like, mostly in the regional hubs, like Sunny Coast, parts of Tasmania, Victoria, have just gone through the roof. It's insane.
I was saying to one of the boys in the office yesterday, like, across my portfolio this year alone, I think I've increased my rent return by $700 a week.
It's crazy.
Across like 4 properties. Like,
so,
it's insane.
And you've also refinanced. I've done the same thing. So with that refinance, my monthly repayments dropped, but my weekly rental return increased. So, you know, it's just one of those other things that's putting a little bit more money back into the investors, to the landowners' pockets at the moment, to just stimulate everything, keep it going.
Completely. You know, I think the biggest news in the last week is the confirmation of the Olympics.
Yeah, dude.
Huge deal for Australia. Just what we need at just the right time in the cycle as well.
Yeah, for sure. It was such an amazing presentation. I watched it live, and I got so stoked, hey. I was just getting so into it. I was full yes, Olympics.
I bet you did, man, with the properties you own in Brisbane.
But look, there's some crazy things happening, and the day that we figured that out, we started looking back at some historic data. We only really had data from the 2000 Olympics in Sydney to kind of refer to, because we were like, I wonder what sort of change that had, or what impact the Olympics had back in Sydney. And it was crazy. From 1997 through to 2003, the Sydney market increased by 97%, potentially due to the Olympics, which is massive.
You know, it was a good time in the cycle. Like, it was halfway through the first half moving into the second, which Sydney would have always done pretty well. But you add in that infrastructure, that money, and that global speculation, it just went absolutely nuts. Now, I think the Australian Financial Review came out this week and said that they are forecasting or expecting house prices in Brisbane to double between now and the Olympic Games. Whether that happens or not, who knows? But that's exciting sentiment, and that's exciting storytelling, you know what I mean?
Yeah, and we've been talking about Brisbane for the last few years now, and really bullish on Brisbane. So, you know, all economic conditions, in terms of the current Brisbane real estate cycle, things were already looking good, and this just is another added bonus, hey? It's like an extra cherry on top.
So what we're, seeing based on having a look at some of the Australian government's websites and the Queensland government's websites is a huge surge in jobs.
Yes.
They reckon about 90,000 jobs will be created in Brisbane and about 120,000 throughout Australia as a result of this. On top of that, you've got unprecedented economic spending on infrastructure. So, the highways will all get upgraded. A lot of the sporting venues, a lot of the places like the villages, etc. A lot of the accommodation, a lot of the boardwalk and waterfront areas, but most importantly, the light and heavy rails, which is going to be the key difference infrastructure-wise. And, what follows that infrastructure spending is normally short-term growth around properties in those areas.
Yeah, they want to make sure that all of southeast Queensland is nice and connected, make it easy for the athletes and all the spectators to get around. I love that they're coming from that sort of sustainable approach as well. So it's not just like money, money, money. It's more about the environment as well, which is going to be really nice to see. And I think it's going to be great to see Brisbane become a bit more of a well-known city, a bit more eyes on the city and things like that as well. Like, it's just going to be really, really awesome.
I think KPMG went on to say that there's going to be about an $8.1 billion economic benefit through the jobs, through the tourism, through the games, and through all of the side service benefits as a result of these Olympic Games, which is a huge cash injection into a much-needed Australian economy at the moment.
And the good thing is you've got all levels of government working together for this as well. So the Fed, the state, the local governments all working together to make it the best experience for Southeast Queensland, which is amazing. So good work, Brizzy. Can't wait to see the Olympics come out here, and it'll be an awesome age. It'll be interesting to see if Benny's little daughter makes it in there.
I want to see Usain Bolt come back from retirement at like 45, 50 years of age.
Someone's going to break his record on that Olympics for sure. Let's go into core logic. I guess we'll start off by going through the indices report, which is just the most positive stuff we've seen in years and years and years. So I'll give you the year-on-year breakdown for all of these different major metro markets around Australia. So Sydney, year-on-year increase, 19.33%.
Oh, man.
Second performer after Darwin, which went up by 21.3%. So it's been a long wait for Darwin, but it's finally coming. So well done, Darwin. Then we've got Hobart, that's come up by 19.19%. So doing really well down there still. It's had an amazing run in asset prices over the last 5 years in Hobart. A couple of my mates from Sydney have bought some properties down there, and he's just like loving life.
I bet.
Yeah. You know, Sydney then coming in as the fourth performer there at 16.13. Same thing for Brisbane. It's been a long wait, but it's finally starting to improve. And, you know, 16.3 is, 13 is good, but I'd say, you know, that's looking at Brisbane as a whole. There's been some higher performers and some lower performers, so there's still plenty of opportunity out there. Then coming in after that was Adelaide at 15.23%. Great run down there. Perth at 10%. Then Melbourne, the lowest performer, at basically just under 8.9%. So all positive experiences for every single capital city around Australia. Who would have thought that during a global pandemic, every single capital city in Australia would have increased in value?
It's insane. Like, I know that there was a lot of people that freaked out about last March through to about last July, August, and it's crazy to see how quickly that fear has been able to turn into positive sentiment now. You know, not just that though, in terms of the average annual growth rates, but the monthly growth rates in some of these cities is insane. Like, I think Sydney, Adelaide, Canberra, and Brisbane have all increased by over 2%. Almost 3%, some of them in the last month, which is just, it's big money. Like when you're talking 3% a month, we might be talking a 30% growth year. 30% on $1 million asset is $300K better off someone's going to be a year later. Like, it's huge money.
It's big money. It's massive money. But it's not just the values, it's the rents as well, as we were talking about. And rents have increased 6.6% in Australia over the year, which is the strongest growth in over 10 years. The decade average is 1.8%.
It's insane. Like, and within that, there's markets like some of the northern New South Wales markets, the Sunshine Coast rental markets, even parts of Brisbane that I've seen 10 to even 30% increases in rents in the last 12 months. It is, again, just insane. Like, that's 10 years worth of rental increases occurring in 1 year.
Yeah, and this is sort of leading towards, it's saying that there's over 1/3 of Australian property is more affordable to own than to rent nowadays. So these rent increases have been obviously making it pretty expensive to rent, but with the record low interest rates, you know, people are paying less in a mortgage than what they would be for rent in over 1/3 of Australia. It's massive.
You know, I was talking to a friend the other day, right, and in some of these markets in Brisbane, right, you can buy a home for $450K. And, you know, I can't work it out off the top of my head, but let's say it's a 3% interest rate. We're talking, what, 3, 6, 9, 12, plus another half. We're talking about, you know, 14 grand a year in interest, plus about another 7 grand a year in costs. So we're talking about $21,000 per year to hold that asset interest only, 100% financed. Versus renting the same thing for $450 a week. Like, you know what I mean? Like, it's actually in so many places close to the city of Australia and the regional markets cheaper to own than it is to rent. And that's insane, because that's going to entice a lot of people like myself into that market.
Yeah, and it's helping a lot of our clients as well that are coming in that, you know, understand that interest rates are super low right now, and they do want to get a bit more of a cash flow return. And it's like we've been running through some numbers with clients during strategy sessions, and that we're seeing that most properties are cash flow positive with a decent deposit and a good interest rate at the moment in most of the areas that we're investing in Brisbane. So it's good for the investors where it's not costing you any money to hold these assets because the cash flow is so strong, meaning that you can continue to save to buy that next property, or it just doesn't hold you back too much.
I love it, man. Like, I've even noticed on my own portfolio after going from 4% interest rates down to like 3.5, in some instances 2.6, and then getting the offset account set up for my portfolio and putting a little bit of cash in some of them, plus increasing the rents. Like, I've got an account where from all of my properties the rent goes into and then the expenses go out. And for years and years and years, that account was just breaking even. But I've noticed every single fortnight now it's starting to grow. And I'm like, that feels good. Like, I know there's heaps of investors around Australia that are now starting to pocket a little bit of passive income, which is beautiful.
Yeah, and as we were sort of talking about in last month's market update, there is a potential interest rate rise. It just gives you that little bit more confidence knowing that these things are going to come in the future. You've just got that bit more of a buffer when it does happen.
Without a doubt.
Just a little bit lower risk. Now, the next was from Property Share Market Economics, which is Phil Anderson, Akil Patel and the crew there. Talking about some pretty amazing stuff. Like, we were reading through about 3 or 4 of the updates and we're like, I don't know how to put this into a bloody video.
Yeah, I don't know how to put it into a 15-minute vid.
Yeah.
There's some incredible stuff, and what I will say is just go over there and subscribe.
Yeah.
Life-changingly good info, but there are a few great little gold nuggets that have popped out.
Yeah, so, first things first is that they're saying that it's the easiest financial conditions in history in terms of bank credit and the interest rates at the moment, which is huge. Like, that's a big call. Obviously makes sense with record low interest rates, but, what these guys believe is this can only lead to one thing, which is mass speculation, mass increases in land values.
It's not just people like me, Simon, or you guys watching this that care about property or the people that live in it, but the banks, and a core part of their business is lending money to you at 4% and borrowing it at 1% right now. So the banks are making massive amounts of profits, and those profits increase their book, and that when their book increases profitability-wise, they can lend more money out. And so the cycle's going to perpetuate itself. Yeah, and,
these guys were saying that the central banks are afraid around the world of another 2009 collapse. So they're doing everything in their power to be smarter and avoid this happening again in the future.
Low interest rates, helicopter money,
cash,
infrastructure spending, printing money, quantitative easing. Crazy amounts of stuff is going on right now. Like, everything that Ray Dalio talks about as the way to sort of save a global economy.
Yeah, exactly. The other interesting thing was that the All Ordinaries, the Australian stock market has broken into new highs again, which is good.
First time this cycle since the last GFC. Like, that's a big deal.
Yeah.
A big deal.
Yeah, and people have been making coin. Like, I've been talking to some people that are, pretty heavily invested in the stock market, and it's been a really good 12 months, but there's obviously those longer term investors that have been waiting for this to come back. A lot of people, a lot of the baby boomers got hammered during the 2008 global financial crisis. And, obviously this finally getting into record new highs, it's like people are finally making some good money again.
What that's going to mean, and I've talked to one of our mates, Adsy, about this, who's an engineer and a mortgage broker, and he said that, like, a lot of people wanted to retire in the GFC, and then because, like, my dad's stock market, or share portfolio in his super fund halved, like, literally went from $1 million to 500K. It's probably just gone back to where it was now. There's a lot of people like him that would have liked to retire, that were waiting for it to get back to this level, and now they can start cashing out, which will mean, expensive properties will be sold to downsize. People will be moving out of the cities into more regional lifestyle markets, and again, that extra flow of money that hasn't been in the market for the last 12 years is going to start coming back, and that's another positive, particularly for regional areas. Yeah, and I was reading in a CoreLogic update that impact of those baby boomers, the downsizers selling all of those properties, because in the big markets like Sydney and Melbourne, and these baby boomers have owned these houses for 20, 30, 40 years potentially, got no debt on them, but they're worth $2-3 million. So
So you've got a massive amount of equity in their home, a good amount of money
cash in the economy, right?
Yep, good amount of money in the stock market as well. They sell to downsize, so they're selling their 3 mil to, downsize to 1, and then, they're pocketing 2 mil, plus they got their super, and that's just going to filter through the economy.
Where do I sign up? Sounds amazing.
Dad, watch out, Ben's going to come for you. He's been beating people up, and
add your kids, add your ass.
The other thing that we sort of wanted to touch on was just this idea around how much infrastructure actually impacts real estate land values. And this is sort of more at the Brisbane sort of market, because we know that there's been massive infrastructure projects coming to the market, like the Cross River Rail, like the upgrades to the airport in Brisbane, up here on the Sunshine Coast as well. We're seeing heaps of new buildings being built. Like, you go into any high-rise on the Gold Coast or Brisbane right now, and most of your view is bloody
cranes in the
sky.
A lot going on everywhere.
Yeah, they're putting in the metro as well, just to make it a little bit more connected. And now that the Olympics have finally been confirmed, it's like, okay, cool, well, we need to finish all of this before 2032. So it's just going to speed things up. It's going to make the Southeast Queensland market so much more connected. And, people like to speculate on this sort of stuff. So those locations that haven't been as desirable in the past because they're in the middle of bumfuck nowhere are now more accessible because of, better major arterial roads, better public transport options, things like this. So it's, going to make people speculate on these land values even further.
And on top of this, the best thing that's happening in the Australian economy at the moment, from my perspective, or the worst thing, is the trade rates and the cost of building materials have literally gone up 15 to 30% in the year. All of those people, let's say that you're a plumber and you're earning $60 an hour, now you're charging out at $100 an hour, or $200 an hour in Sydney, some of these guys are making. Like, that is real cash money that will create surplus funds. And, a third of Australia's population is employed in these sorts of services. They're going to come into the marketplace with more money. That's more money going into crypto, stocks and property long term, more renovations, more cars. Everything benefits as a result off the back of this. So when they sort of start targeting infrastructure like Australia is now, like, I think they're putting at the highest level, like the Fed level, 2% of Australia's GDP into infrastructure, not including the Olympics and all of the state level stuff. Like, this just results in a ridiculous amount of inflation, which results in a huge amount of wealth being created, which results in a huge amount of speculation medium term.
Amazing, man. The last group that we want to talk about is Propertyology. Just love the articles. I think, is it Simon Priestley?
Simon Priestley.
Yeah.
Love his articles.
He should be an analyst. I think Ben was saying it. He should be a property analyst and just leave the buying up to us. But no, he's been putting out some wicked articles, but he's indicating that we are right now in the early stages of a national property boom. Massive call. And all of these things that we've been talking about kind of link to that. We are very bullish on the market up here at the moment. Think things are looking insane. The population growth in Australia is at the lowest level since World War One.
Population growth level. So that's important, because one thing that's kept Australia propped up compared to America and Europe has been an artificial amount of international migration coming in, like 300 to 500,000 people per year. Now, we know that the long-term target for the government is 60 million people, which means they're going to want to keep putting in 400,000 people a year for the next 50 years to achieve it. But that is something to watch out for. Like, hopefully we get through this pandemic sooner rather than later. What I think is going to happen is a whole heap of Australians living overseas will continue to come back, plus internationals, plus the students, plus the tourism, in unprecedented numbers. But it is something to look out for. Like, if we get 3 or 4 years of no population growth, or even negative population growth like we're seeing at the moment, and we actually do, according to Simon, have more than enough property in Australia currently, and we're going through an unprecedented building boom, we could end up in a situation where America's been and Europe's been many times oversupplied, with nobody coming here and nobody having babies, and that could actually be a real medium to long-term negative for Australia. So I think the Australian government's smart enough to know that, and
of course,
as soon as they can turn the tap on, they will.
Yeah, and Phil and Akil were talking a lot about, like, this isn't just Australia going through this. It's around the world. The UK, most countries in Europe, the US, you know, all of these big nations are experiencing positive economic times at the moment. So it's not just Australians that are earning money. It's around the world. This is happening. And
some of the capital cities in America have literally increased by $1 million this year.
Yeah.
Like, insane increases.
It's massive. So these people are also going to do the same as what Aussies are going to do once the borders open back up. They're going to travel. They're going to go spend some money overseas. You know, maybe they make it a little bit easier for international people to invest back in Australian real estate. Who knows? But, you know, I can imagine that they're going to open the floodgates because, you know, why not?
Of course. Yeah, that's beautiful. So, like, what we're noticing on the ground up here, and I think that's equally important, is the vacancy rates are dropping dramatically.
Yeah.
So some of the beachside suburbs that were sitting at 2.5% this time last year are now at 0.5%. Some of the suburbs that were at 1% are now at 0.25%. We're seeing people like lining up out the door, properties renting in a few days to a couple of weeks, worst case scenario. We are still seeing houses selling that quick.
Good houses are selling really, really quickly at the moment, but it seems as though it's a different competition. You know, it's not as hectic as it was 6 months ago or 3 months ago. So you're not getting like 50 plus people coming to an open home. We're not seeing 10 plus offers on the one home. You know, we are seeing still that competition, still a number of people coming through open for inspections, still competing with maybe 2 or 3 other offers at the moment. So it's still certainly a hot market, and, you know, that opportunity to buy under market value, I think that's just a thing of the past for the next few years in Brisbane. At least we'll see what time tells, but, you know, you've really got to come in with a competitive offer. You've really got to understand exactly where market value is so that you're not missing out on opportunities, but also not overpaying.
I love that, man. That's such good advice for this current market. And while there's not an opportunity to buy below market value, there is an opportunity that I think Simon talked about in one of his articles, and that is there are places in Brisbane or Sydney or Melbourne that have done 8% or 10% a year for the last 10 years. And then there's suburbs not that far away from those that have done 2%, 5% per year. So it's, you know, you might have missed the off-market, under-market value opportunity unless you're working with someone that really understands the market and has the relationships. But what I can say is there are absolute gold nuggets littered all the way through Adelaide, Perth, Darwin, Brisbane, probably parts of Tasmania that haven't grown yet. Same with Sydney, Melbourne. Like there's pockets that just represent absolute gold right now still.
Yeah, you've got to, you know, throw out the location bias and really get into the nuts and bolts, really understand how a market moves, because, you know, there's still so many little hidden gems around if you know how to identify them, if you can, you know, in a way predict that ripple effect and identify the right key performance indicators that have worked in other locations, but maybe that growth hasn't come yet. There's still so much value out there. We're still buying properties within 25Ks from the city for under 400K in Brizzy. So there's still plenty of value.
You know, I love that, man. Like, we've identified some suburbs together recently that, you know, a place closer to the city might have literally gone up by 100% in the last 5 years, and then this suburb over here in the same time frame has gone up by 6%.
Yeah.
And it's just a beautiful thing to watch, to look at, and to see it starting to perform. And there's so much time. Like, I'm not joking. I think we bought a place. This isn't an average, and this was a knockdown. It's 19Ks in the city for $320,000 a couple of weeks ago.
Wild,
like, it's insane the value around if you know where to find it. And you know, I'm excited. Like, I've just picked up a property or two myself. Simon's just bought as well. Like, nobody has missed the boat, that's for sure.
No.
Outside of maybe Sydney, I think, or Hobart.
I think that's important to recognise. While things are looking good and markets are increasing rapidly, you look at a Brisbane or an Adelaide or a Perth or a Darwin, you know, even though these markets have done really well over the past 12 months, the 8 or 9 years before that have been really, really average. So time is on your side. Don't get caught in that FOMO. Don't feel as though you need to rush out there and buy a property immediately. It is so much more important, and you're going to put yourself in a far better position in the future. If you just take a moment, take a breath, have a bit more of a longer term outlook on life. Why am I investing in this market? Why am I investing in this property? How is it going to help me achieve all of my goals? Start learning about the markets and don't just look at every suburb. Like we were talking, there's over 260 suburbs in Brisbane. You just can't look at all of those suburbs. You really need to develop that strategy, refine that back to a handful of suburbs that you can really specialize in, become an expert in, so that you aren't making any of those mistakes. And if you take your time, if you find the right partner, if you do the right research, you're going to get an amazing result. And if all things go to plan as in line with this Australian Financial Review, there's a chance that property could be worth double what it is today in 11 years' time.
Can you find one for me on the beach in Brisbane? Imminently?
I know, after that, I'm just like, shit, I wasn't going to buy any more properties, but I guess I'm going to have to.
No, I love it. It's so exciting, this stuff. It's our passion. For those of you who love property and love the idea of working slowly towards financial freedom, giving yourself, your family, your partner choices down the line to be able to live the way you want to live, we'd love to offer you a one-on-one strategy session. Please jump over to the website, www.pumpedonproperty.com. We can talk about where you are and where you'd like to be in the future. We can educate you on the market up here, and you can take that, absolutely smash it on your own. We give everything away, or you might be able to become one of the small number of people we work with each month. But either way, we wish the best for you. Don't get carried away in this market. Just because things are increasing in value doesn't mean you have to put in silly offers. Just because you miss out on 5 properties doesn't mean you won't get the 6th one. Just enjoy the process, enjoy the ride. And for all of you out there with properties at the moment, enjoy the equity and make the most of it while you can.
Hell yeah. And please subscribe to the YouTube channel, guys. Give us a like, give us a comment. Head over to our Instagram, Pumped on Property, or Facebook, where we're putting up daily quotes, daily little pieces of gold that we're finding in the market from all the different resources that we follow. And share this video to somebody who's thinking about getting into the market soon enough. But thanks so much for tuning in, guys. And as always, invest safely. Sweaty. So sweaty. Oh, that's good.